Sarah Deanhart with the Ortman Group, and I'm here with...
I am Ian Beamer with Guaranteed Rate.
And we are going to talk to you today about different types of mortgages that you can get. So Ian, a lot of, especially my first-time buyers, they really want to understand what are their options for financing. So maybe you can walk me through the different types of mortgages that a first-time buyer can get.
Sure. The most common first-time homebuyer loan would be a conventional loan. Conventional loans will go up to $510,000, $510,400 for a single unit. If you're a first-time home buyer, you could put down as little as 3% on a conventional loan. If you have owned a property in the last 3 years, you would not be considered a first-time home buyer. Your minimum down payment would be 5%. If you're going to borrow more than $510,400, the next step up would be an jumbo loan. Jumbo loans typically require a little bit larger down payment, a little bit higher credit scores, sometimes carry higher interest rates. And then another option might be FHA loans. FHA loans help first-time homebuyers quite a bit. Great option. They'll let you put down as little as 3.5% down. They're a lot more flexible on credit scores and debt-to-income ratios as far as income goes.
Are FHA loans more expensive than a conventional loan? How does that work? What are the key differences?
Yeah, so a lot of times FHA loans actually have more competitive interest rates. They actually have lower interest rates than conventional loans, but the mortgage insurance is set up a little bit differently. So they have monthly mortgage insurance, and then they also have what they call a mortgage insurance premium, MIP, which is 1.75% of the loan amount, tacked onto the loan balance, and then you finance that. So it's just a little different.
And what about for our veterans out there? Are there any special loans that they can get after having been in service?
Absolutely. So veterans are typically eligible for VA loans. VA loans are by far the most aggressive lending. They'll let you put down 0%, 100% financing. There's no mortgage insurance, and the interest rates are incredibly low. So if you're eligible for a VA loan, if you've served in the military, that's definitely the option to go with.
Fantastic. So for either of those loans, it's different than a conventional loan. For VA or FHA, are there other requirements or anything that's different in the process that buyer would have to go through?
Absolutely. So on a single family home, it's not too much different. They just want to make sure that everything's in good standing. All appliances are in working order. All utilities are on and functioning. If it's a condominium project or a townhome project, a lot of times the master association has to be FHA or VA approved, which is sometimes a labor-intensive process.
And so if they aren't already VA or FHA approved, then is it possible to get that condominium or townhome, approved?
Yes.
Or should that buyer kind of stay away from it?
So sometimes is really the answer. So it depends on the association. It depends on rental concentration, and you just need the homeowners association to be willing to dig up the paperwork that we'll need to submit to VA or FHA to get the project approved.
Fantastic. Well, Ian, thank you so much for being here with us today. If you liked our content, please like, share, or subscribe to our YouTube channel, and we greatly appreciate you being with us.